Good afternoon, everyone. Let's do a quick sound check. Hopefully you can hear us loud and clear. What's going on, Coach Paul?
Hey, Coach Jay, everyone. I hope everyone had a good day. If not, I hope you limited your loss.
Let's get a confirmation in the chat if you can hear us and see us well, and we will get started, but hopefully everyone had a good day. We got a 5x5 woohoo from Steve. I think we're good. Good
You
audio,
is it
good
good? I
video.
take it, right?
I think a woohoo is good. Good audio, good video from Andrew as well. Thank you for that, Andrew. Welcome everyone to At the Buzzer, our market recap. If this is your first time here, I am Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but I believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I am Coach Jay. I've been a Topstep Performance Coach for a little over a year now. And it's crazy to think that tomorrow is Topstep TV's first birthday. Wild to think about that we've been doing this for almost a year already and continuing to grow this. And joining Topstep, it's been a great experience to do so far. I've been a trader for about 11 years now. I switched over to trading futures about 5 years ago, and that is Coach Paul. I'll let him introduce himself. And I see someone in the chat said my hair looked green. Thank you, green screen. Go ahead, Coach.
Thank you. Well, I'm Coach Paul. I've been involved in futures trading for 4 decades. Um, I have traded just about every contract you can imagine. Um, and I've had a lot of experience, some great highs and some low lows. And just here to help and spread some wisdom that I have, at least help out. I know how hard this journey can be. I've been on it. So glad to be here at Top Step. Been here for about a year, 3 months. I can't believe Top Step TV is 1 year anniversary tomorrow. Wow. Time flies when you're having fun, huh?
Yes, it
Um,
does.
so in this show, like Coach Jay said, we'll review the markets and also give us some questions. Maybe there's something you're struggling with that maybe we can help. Um, and I truly believe this, and I'll say it again, as there is no such thing as a stupid question. If you're confused, you're confused. We're both basketball coaches too, and I go through this. I coached every level, and you find out what you don't know in the game.
Yeah,
So, right?
it's a great
And
point.
those
Yeah,
questions needed to be asked. So, sometimes we're humans. We don't want to put up a stupid question, or we think, well, I should have known that. And no, because it, do it, ask it, because the things you don't know or the mistakes you will make will be in trading live, right? So I truly believe there's no such thing as a stupid question.
I agree with that. And I know I made that joke yesterday. I agree with that, though. Ask the questions. It's the only
Yep.
way we're going to learn and continue to move forward. But the way we start every segment, we're going to go over the top percentage movers of the day and then a little bit of a recap of the news. Today, to the downside, we see heating oil down 2.43%, the Nikkei down 2.62%, and nat gas down 2.81% for our biggest percentage movers to the downside. To the upside, we have the Japanese yen up 1.38%, soybean meal up 2.43%, and wheat up 2.43% as well for our biggest percentage movers to the upside. For our major four, we have the ES down 0.37%, crude oil down 2.12%, gold slightly up 0.08%, and the Nasdaq down 0.37% as well. So violently unchanged in the equities markets. Not too much of a surprise given the heavy down day that we saw yesterday. A little bit of balance and digestion, if you will. We'll get into that. But a little bit as far as the news. We know we had news coming out this morning. The big one being JOLTS, job openings and labor turnover survey. What was expected was 8.1 million new jobs, and what came out was 7.6 1.73 million. Just further confirmation of a weakening job market. We did have Fed Bostic comment on that, say that the labor market is weakening, but it is not weak. So it's trending lower, but it's not weak yet. And sure, if you speak to people who are working for tech companies, have 9 to 5s and things like that, we do see layoffs and things. So the data is still out there. When the numbers come out, they kind of prove, I think, what everyone is seeing, that the labor market is weakening. And with that being said, I think we have the upcoming Fed rate decision. Excuse the white screen. But we've been talking about this rate decision coming up in 2 weeks and what the Fed is expected to do. This is the highest that we've seen the probability of a 50 basis point cut. Right now, probabilities are 45% for a 50 basis point cut and 55% for a 25 basis point cut, kind of leaning towards that weakening job market. Coach, I know you traded the treasuries today. If you want to talk a little bit about what you saw there when we get into the charts, I think that would be awesome.
Yeah, it was big movement in the bonds, 10 years, 5 years, basically the treasuries. And they've been struggling, but today, I guess that must have been the news from Bostic. And the expectation now that it's going to be a half point.
Right.
My expectation is none. The market, I just read the market
Yeah.
and trade accordingly.
It's a great way to do it, right? Where you can't exceed your expectations if your expectations are zero.
Right. Another thing is with when we trade on expectations, we start dealing with what I'll call looking into the future.
Mm-hmm.
But if you have a position on the future, doesn't mean anything. It's right now. You're being marked to market. So in my experiences, I trade in the moment, measure my risk, and trade the market where it is right now. And that can be very, very hard.
Yeah.
But this is not an easy game. It's counterintuitive. It's emotional. We had a good guest today, who was was he a psychologist, a trader?
Sean Sawyer. I didn't
Sean.
get to see the segment. I was out of the house at the time. But I heard the beginning of it, and yeah, he was sound like a clinical psychologist, and definitely a segment I want to rewatch.
Yeah, and then that part is, I came from as an economist, and I started working on the floor when I was in college at 18 years old. Um, I thought, if I could just know the most about the economics of a market, and then my expectations were that I was going to get the Ferrari by the time I was 19. Didn't happen. Um, why I bring that up is the expectations of
That didn't
where the
come in your
market.
welcome package?
No,
The keys to the Ferrari didn't come in your welcome package? You got to talk to whoever
no.
hired you, coach. I don't know.
Yeah, I had I had to pay 2 tuitions for school and for
Right.
trading.
Right.
And expectations can lead to being stubborn, where you have to be right rather than trade right. And we go through that a lot here on this program, and we'll continue to do that because
Absolutely.
it leads into a question. Chris Bova, I'm just doing everything backwards. Tiny wins, huge losses. Can't trade right micros because I get nowhere.
That's an interesting
Coach?
one, Chris. So you said you can't trade micros because you're not getting anywhere, but, and this is not just directed towards you, but you did pose the question, when you're trading minis, how far are you getting with that as well, right? I think we all have to remember that slow progress is better than no progress. And just because you're trading micros and it feels slow for right now, that doesn't mean that that's where your journey is going to stay with trading right now. Do you have to have the patience to build to the point where you can trade more size if that's what you want to do? Yes, but it's not going to happen because you want it to or when you want it to. This is something that you have to be very patient and diligent with. And I would try to reframe that mindset around trading the micros, right? Where if you saw Dakota trade micros today, right? Yes, he was up 17 grand by the time he was trading micros, but he can still scale down and trade those as well. There's a ton of opportunity, and I think it gets overlooked because we see some of these high P&L numbers and want to chase those. You got to be honest with where you are in your trading journey and trade the contract size that is meant for you.
Yeah, I'd add one more thing. There's a concept that I learned from Ray Dalio in his book Principles. One's the largest hedge fund, very successful investor and trader. He started in a futures business, but he calls that concept struggling well. When we're trying to just make money and avoid losses, we tend to struggle poorly, and you do everything backwards. And I've been there. I came to buy this, and why am I short? Well, because when I bought it, it was a loser, and now I'm getting short, and now it's going back the other way, original way. If it's a constant battle, and we've all been through it. If you're
Yep.
trading, you've been through it from the greatest trader on down. So keep focusing on a trading plan that you can execute. And I do it with micros. And remember, even the greatest baseball player starts out in the minor leagues and has to work the way up. This is, like a 50,000 combine is basically minor leagues where you can learn to hit a curveball, right? And it's funny you bring that up. I happen to work with someone who was professional trader. I mean, excuse me, professional pitcher for the Oakland A's, Steve Wojciechowski. This is when I was on the floor, and he was a left-handed 6'5" throwing junk pitcher. And he gave me a story about Michael Jordan. He faced him in the minor leagues and struck him out every time, 8 times. I go, what was the trick? He goes, well, he can't hit a curveball, so he's never going to be in the major leagues. So why I bring that up, in a combine, if you can't take losses and you can't lose well, that's a curveball, right? If you can't hit the curveball, you're going to have to learn how to hit the curveball. That's where we start off. Start off small, struggle well, learn from your mistakes, and you can make it.
Absolutely. Let's get into these charts. JK had a comment. Could you show your power trade settings for Quantower? I'm going to share a video on those in Discord. I did put a video together. We're trying to get that on the Topstep YouTube page, but I will put a video in my Discord channel and you can take a look at it there. Excuse me. And Tess, yes, I get that comparison all the time. But let's get into these markets. Let's talk about the ES to start. Pretty balanced day that we had. Range-bound day did provide opportunities. We know that early on the market may have been waiting for the JOLTS print, where we did see a little bit of a rally into that. But yesterday we had these big moves down in the equities. I think in the ES we were down about 2.25%. The Nasdaq was closer to 3% down. And a lot of times when we see days like this, we see some balanced digestion in a following day. Just for the market to kind of figure out what is going on. So we can see this balance here. I'm going to throw the Topstep daily levels on the chart. And we have settlement that's kind of right in between the range. And a lot of these levels we didn't even get to. Coach, I know you said you had a pivot that was up in the 70s that we didn't really trade to. I think I saw a sell side imbalance on the Topstep daily levels webpage that I put on there around the 55, 60s. Just pretty much a range bound day. I want to go back to yesterday really quick. And we have, you guys know how often I pick out these volume anomalies. We have the open volume, which we know is going to be pretty high. But then there's just one that stuck out here that was at 1 p.m. Central Time that I thought was pretty interesting because around that time, we're coming back from lunch. Sometimes we get a volume spike around there. but it is an anomaly based on everything else that was trading around it. And again, these are on 3-minute candles. I'm going to ignore this because we know this is the close. We have MOC and some weird things going on there. But that range, we revisited it and rejected off of it. So I thought that was a really nice opportunity, just, picking out one of those anomalies. But a balanced day here, Coach. If we look at from the time the New York session started, we have an anchored VWAP from the session open, and pretty much once it got back up to settlement, stayed there, right? A pretty flat line. We traded on both sides of that VWAP. We had the JOLTS print that came out as well. I'll frame that candle out, and it pretty much set the range for the day.
Low on that JOLTS number? I didn't even realize that
Yeah.
I was long.
So it came back down to the low of the opening range, the low of the initial balance, which was at 55.20, 55.21. It checked down there real quick, bounced off of it, and we didn't get back down there. At that time, right, so the time that we did recheck it, the anchored VWAP from the session open did leave the range to the upside, so we did have some buyers in here. And I see Coach Hoop talking about the large order that we had out there. I don't know if anyone was watching either the DOM or watching Topstep TV when we called it out, but there was at one point, the highest I saw it was 1,800. 1,800 contract bid at 55.40. And that's a passive buyer looking to get into the market. They put the order out there. It ultimately did get filled. I believe, I don't recall what time it got filled. I think it was around that JOLTS print, maybe, but it was really interesting to see that, Coach. So we saw the 1,800 lot at 55.40. The market trades down to it. Within 2 ticks of it, there was an offer of about 1,400, 2 points higher. So to me, what that looks like just from an order flow perspective, and then you look at the day type that we had, it looks like some type of inventory adjustment. Somebody's, closing out of position, whatever it is. But a lot of business was able to be conducted in these small price ranges, which if I'm reading that, tells me that, hey, if there was a bigger player that needed to get an order off, they're not going to have to move the market much to do it because they were able to get fills in this range. So,
Coach, this would be perfect time. Joey Adams asks about why does price gravitate to the large order blocks?
Yeah, they're out there to get filled. So it depends, right? So sometimes we see these order blocks and people worry about spoofing and things like that. More often than not, and especially in the case of this order, someone put 1,800 contracts out there. They wanted those to get filled, right? They didn't put the order out and pull it. They put those orders out there because they did want to fill. Now, if you hear Hogue talk, he says the market's job is to facilitate trade. So the market sees that and says, hey, somebody wants a 1,800 contract fill. They're going to trade towards those prices. Now, a couple of things can happen, right? If I'm a shorter time frame trader, right? I'm a day trader, and I'm short into that, I'm probably going to close my position, and I think that's what most of us should do. And we had a house account trade on short in the ES, and I think they closed the trade after seeing that because that's going to get filled, right? That's a passive buyer. They're going to absorb any sell orders that come into the market. And they're absorbing 1,500 contracts, 1,800 contracts at one price. So a lot of the times you'll see the market go in their direction if there's no follow through on the market sells that take out their position. Whether, Ty Guy says it's a passive algo, whatever it is, right? Algos, whether it's an algo or somebody clicking the order and placing 1,500 contracts, their intentions of putting those orders out there are to get filled, right? And if they're on the bid, they're a buyer. So why does the market gravitate towards those big orders? Because the market's job is to facilitate trade, and there's a trader there looking to get a fill. Sometimes you see they don't get a fill, and you'll see that order chase the market, which is also a signal that the market may continue to trend in that direction. We see it happen a lot. We'll see an offer come out, they try to get a fill, they don't get it. Now they move their order down 5 points because they want to get that fill, but the market's kind of running away from it. Anything you want to add to that, Coach?
And I would add to it, you know, trade large orders like that. In my experience, and I think it's very highly improbable that it's one guy. It's
Hmm.
an institution. It
Right.
could be an option market maker. It could be various things. But the bottom line, it's there. If it gets filled, and like Coach made a great explanation, the market's job is to facilitate trade.
Right.
Um, so that's he did get that order got filled,
That order
didn't it?
got filled. Yep, they did get filled. They did get filled.
And who knows? I think if it was an institution that needed something done, that's where VWAP comes in.
Hmm.
They're just gonna leak it out every 5 minutes, 100, 100, 100, 100, and beat the average of the day. And that's how that's the principle of that. But a big order like that, they want people to know. And other traders, other trading houses like Citadel or all the big houses, they want to facilitate that to keep them in the market.
Right.
Um, so great explanation, Coach.
Yeah,
That's all I've got.
I think we've gotten into this a little bit in Discord, right? Like what the mechanics of that trade might be. What was interesting about that trade, Coach, when they were out there, and I want to pay attention to this 55-40 level because, again, a large market participant, whether it was one person, whether it was an institution, like Coach said, likely an institution, we can see how the market responded around that area, right? So, maybe 55-40 is where they got that fill, but they're probably somewhere in the zone. We can see, MOCs, we checked up to that price exactly and rejected off of it. Coach, the mechanics of that trade, when I looked at it, it looked like it got filled in one execution. Is that just another party that says, hey, yeah, I need that fill, I can take it? How does that work?
Okay, that's my guess
Yeah, right,
because they put it out there. All right, and they probably these big institutions talk to each other. Hey, I need to move something. What do you take? Well, you're going to have to give me, it's called, you're going to have to give me a runway.
okay,
I want 3% less than the last trade, and I'll take it for you in one shot. And well, hold on, whatever they're doing, they have all their connections. Like,
right,
okay, let's make a package and take them out. I think that's most likely what happened. Like, okay, we got it sold, put it out there, we'll take it. Some guy at Topstep's not going to take it out. Some guy sitting in his basement isn't going to take it out.
right,
But as Coach says, it's really important. The important thing is the outcome of that.
correct.
And what I've learned from coaches, he marks those areas, and they become important areas.
Yeah, I'm going to be watching those prices for sure. 54.50. Honestly, it's a zone. I'm looking at 55.35 to 54.50. 55.40, sorry. It's at that 5 point zone. 35 to 40 is where we've seen a lot of volume take place. If you use volume profile, that's probably a point of control or something like that. But really interesting that a lot of business is being conducted in these prices. But yeah, not too much
Yeah,
else on the equities. Kind of a range bound chop fest. Go ahead, Coach. You were going to say something?
I'll add one more. In the pit, when big orders came like that, when you didn't have institution, you had to go to the local traders, the members. They had a saying as the bigger traders we get together is fill them up and shut them up. And that
Okay.
meant take that paper away from the broker or from the order, and they would trade it between them.
Mm,
That's kind of that's the same kind of principles. Um, it could be DRW and some other houses said, hey, I'll take 500, you take five. Okay, sold. And then they can transfer it to other accounts, whatever. But
gotcha.
that the output is when you hit it on the head, Coach, that meant something to a large institution. That's valuable information.
Yeah, absolutely. What's interesting also, we have, I just put on here, as far as the day trade perspective goes, the ES and Nasdaq were pretty choppy. Range-bound markets, which do provide opportunities. But what I want to look at kind of going into tomorrow and the rest of the week, we do have this red line here is an anchored VWAP from the all-time high, and it's kind of sitting at this 5,500 as well. So if we test into that, just looking at what the market's response is at that level, we can see we have traded on both sides of it. And right now, if we're looking kind of a flattened VWAP, if it sells, there's potential room lower. That's a big if. We don't know what's going to happen, but I'm just going to be reading the market's reaction around this 5,500 level.
It's interesting today on the daily,
Mm-hmm.
the S&P closed below the 20-day moving average.
Okay.
And the 20-day moving average for larger institutions is an important level. And you're telling me that 1800 lot came in, what price?
55.40.
And 36 is I have 36 as the 20-day moving average.
It meant something to someone.
It meant something to someone, and we didn't close above 36. It looked like it or later in the day, and then it just collapsed after the MOCs were done.
Right.
So tomorrow be interesting. We can't hold the 20-day moving average, and we're under it in the Nasdaq, under the 20 and the 50, and that's after. And then there's the Nasdaq again with that. Is that the S&P or Nasdaq?
This is the S&P. We'll go to the Nasdaq next.
But there you go. Look, we couldn't even. That is the definition of a dead cat bounce. I'm sorry
Agree.
for cat lovers. A dead. No one likes mosquitoes. Okay, bounce. That is the definition. That today's action with what was the volume on the daily volume? Was it average?
Let's see. I took the indicator off by accident. About average. Yeah, about average.
About average.
A little less than yesterday's, but it's a much tighter range, which is interesting.
Yeah,
Um,
it's interesting. It's gotta.
there's a
It's
move
gotta
coming.
go.
Right.
Yeah, it's got to go. And looking at that outside day, that looks really heavy to me.
Yeah, there's our move. I mean, it kind of looks like this, right? We talked about it, the engulfing. We didn't get the extension yet, but not really holding and not really seeing the buyers in there. Of course, anything can and will happen. We do have news coming out later in the week, NFP obviously being the big one on Friday. And then last thing on the ES, I see Brooksy pointing out the jobless claims candle from the 15th. I don't know if it was jobless claims, Brooksy, on the 15th, or was that PPI? But this candle right here, the high of it being 55, and this is only 30-minute. The high being 55.34 and the low being 54.91. So this range right here, 54.91 at the low, and we can see it again. We traded in this range a lot. Again, 55.50. Sorry, 5,500 right below us, 54.91 right below that. And outside of that, there's some room down in this market if we cannot find buyers. Switch over to the Nasdaq real quick. And we'll go to the Nasdaq on a 30-minute chart. And again, Coach, yesterday, here are your moving averages. The 20 and the 50 below the 200 moving average, clearly trending lower yesterday. But then today kind of wrapped around each other, well below the 200 moving average, but in balance like we would expect after such a large move down. And a lot of the same story as the ES. Go ahead, Coach.
Yeah, interestingly, it too did not reach the pivot of 19,200. And and we can see that on that daily we just looked at.
Yeah.
This is not good action. If one of the ways to get objective is to start looking on both sides of the equation.
Mm-hmm.
If you are long or you're short, if I'm long and I see that, and I'm a swing trader, I'm nervous.
Yeah.
There was no good buying. Like, it's on sale and they don't want it. You know, it's like buying old fruit. You better it's the expiration. You better eat it quick. It better go quick.
Yeah.
Um, so interesting.
Yep, absolutely. What I think is really interesting about this is just looking at these major levels again, and we've talked about this stair stepping lower that the Nasdaq looked like it was doing, right? Every major level, it looks like it's rejecting and coming back down. It's kind of the same story, right? We have 21,000 up here. We rejected. The market sold off. We bounced to 20,000. Couldn't hold it. We're slowly kind of grinding lower, and now we're at 19,000 and settling below that as well. So this kind of still looks like that stair stepping lower pattern. Again, anything can and will happen, but it looks weak. Now, if tomorrow we have a 600, 700 point candle to the upside and we, get over this, I'll completely change my sentiment. I'm going to trade what the market shows me for that day. But, kind of looking at the charts this way, coach, it kind of helps paint a picture about what we can expect and what we'll see in real time when we're having to make day trade decisions.
Yeah, that's a thing called drilling down.
Hmm.
Start at least the daily. On the weekends, I look at the monthly, weekly, because I'm looking at the daily every day. Then I go to a 60-30 down to a 3 minute. Um,
Yeah.
but but that's a good way to. It's called drilling down. So, Coach, before we start, this is a good time to show Mira.
Okay.
Mitra Mir wants to know, how do you get anchored VWAP?
All right. So anchored VWAP on Topstep X. I have this drawing tools panel on the left side of my chart. I'm going to right click the one that says forecasting and measurement tools. And in the volume based tools, there's an anchored VWAP there. I'm going to put a star next to it because I use it all the time. But then what I'm going to do is I have this little panel up here that I can move around. I'm going to click on that and click on a candle. And that's going to anchor VWAP for me.
You
Uh,
got
and
that?
and where
It
go ahead, coach.
and it's so easy on Top Step X.
Yeah,
I really, that's a really nice tool. Not all the platforms it makes it that easy. It's just a click and go.
right. And where I'm going to anchor it is to any high volume event, right? So we had the JOLTS number that came out today. I may anchor view up to that, or the session opens. So 9:30 Eastern, 3 a.m. Eastern time for the London Open. Those will be my anchors, and we can kind of see it, right? If you're a VWAP trader, when VWAP starts to flatten out, tells you that we're potentially trading in a range bound market. You want to fade the extremes of the range, and that's kind of what we got. And John wants to know, why is anchored better than regular VWAP? It's more recent. I'll just say it that way, right? I can anchor it to a recent event, and I think we've showed this example before, but I'll show it again. Um, and maybe not the best in this case because we had a pretty range bound market. So these VWAPs are ultimately going to kind of overlap each other. But the full session takes into account a lower volume time, which can be important, right? Sometimes we do see volume trade overnight in the Asian and London session, but anchoring it to a specific candle is going to give me the most recent information based on a market event.
Yeah, Coach, I'd say it's relative. I
Yeah.
don't think either one is better than the other, but observe them. And like Coach just said, have a couple, like the one at the CPI one.
Yep.
I really like putting one on the first half an hour
Hmm.
of any market from its opening, um, because that's where volume comes in. That sets the tone. Then a longer term one, they're better than to me. They're better than moving averages because they add volume,
Right.
right? That
Right.
something in a price doesn't have. I mean, not all prices are created equal. It's not, and
Definitely
it's
not.
some
I
definitely not. Volume is more important.
So, coach, I thought about doing this, and maybe we'll do this for next month. I actually have it on this notepad that I got next to me. But I want to do 30 days of volume analysis for that reason, right? And maybe I'll put together a little bit of a program, but exactly what you just said, right? Volume may be more important than price, and they're both equally important, right? We can't trade these markets without price, but the volume at a specific price tells you what the bigger market participants think about these prices. I did a little bit of back testing, and you can actually change the, we're going to move off of this in a second, but you can change the price scale to show different values, right? I could change this to, percentages, and still being able to make some of the same reads based on what the volume says and not what the price says, and doing those for every market. So we'll do that next month. Put that on the back burner for now, but I agree with you. Not every price is equal. Big market participants tell us what prices matter to them, and those are who we should be following.
I'll make one last comment. We used to
Mm-hmm.
call it in a bid, offer, size. Size moves the market. Everybody has a bid and offer, but if Coach Jay wants to pay 7 for 10, and I'm offering 100 at 8, if I start selling, it's going to move down.
Right.
And it's bid offer size, and VWAP helps define that. And that's the last I will say on that. Let's move forward.
All right, let's move forward. And sorry, I can't move off of this. Smart Money Follower says 5,500 for ES matters. It definitely does, right? I will never say that price doesn't matter, especially because of how much I look at major levels like that 5,500. So Smart Money, I agree with you. Why I would say that price specifically matters so much is because all the market participants that are trading the ES are looking at that price. So it's a higher probability that we're going to have a lot of volume trade there, right? If I was a big institution and I wanted to get a lot of size off, I'm going to do it at some of these major numbers because I know more market participants are going to be looking at that price than a 55, 17 and a quarter. Right. So
Great
I
point.
definitely
I
agree with
can't
you on
get
that.
off of it either, Coach.
Go ahead.
Because I
Keep
just
going.
wanted to make sure it's this price defined with volume is much more valuable than price alone.
Correct.
That's the clarification.
That is it. But good conversation here. I could talk about volume for the next
Yes, you could.
6 hours, but we don't got that kind of time. So
You have volumes of more to talk about.
right, yeah, I could turn up the volume. All right, so let's go to gold real quick, and then we will go to crude oil, which was probably the most interesting out of the four today. And what I see in gold, if we zoom out, go to a 30-minute chart. Interesting in gold, we talked about this level down here, 2505, which was the high of the PPI candle from August. And we bounced there again in the overnight session. Gold in this kind of range between the high of that candle, 2505, and the anchored VWAP from that same candle, right? That was August 15th at 7:30 Central Time. That's where these VWAPs are anchored to. And the range right now I'm seeing is 2505 to 2535, we'll call it. We didn't get exactly up to 35 today. High in gold today was 2532. But trading between that range. Trading between that range right now. And I see that for the foreseeable future in gold. This 200 moving average is starting to trend lower. Go ahead, Coach. Wait, what was that? What was that reaction?
Well, the 200 moving average is right there with the VWAP.
Mm-hmm.
If we close above those levels, I think we'll just rip. That's an opportunity I'm looking. I'm marking it down now.
Uh-oh. You all heard that reaction from Coach Paul. I've never heard that before. So he saw something he liked. And again, anything we talk about here is for educational purposes only. Nothing should be considered trading advice. But I see what you're looking at as well, Coach. If we do get those moving averages to start moving above, and the market to start moving above that, it's a lot of congestion around here. It looks like it's building up energy for a big move in a direction. I see what you're seeing.
Yeah, that's just that. I just think I call this, if that can happen, it's a great place to place risk.
Yes.
I didn't say it was going to work, but I like that kind of setup.
Right.
it's well worth the risk. I'll put 2 chips in, right?
There you
And
go.
then, like, using a poker analogy, okay, now everybody's bet up, and all of a sudden, the f it's in the river, and the last card's coming up, and it comes up, like, not expected.
Yeah,
Someone's caught, and this is what my initial reaction when I saw that. The
nice,
200, those VWAPs, if we get above it, we should have a rip. If
nice.
not, I'll lose a little bit.
And Rips says it all the time. We don't put on guarantees. We put on trade ideas. We put on risk and live with the results. There's no guarantee. Nothing's going to work 100% of the time.
You can't put on a trade without putting on risk.
Yep. We've
Someone
talked about
says
this
they
in
have
we've talked about this in
zero
Discord a little
risk.
bit before, and it's every trade that you put on, more often than not, you're in a drawdown at some point during that trade. The probabilities of a trade just immediately going in your favor with no drawdown, and you still got to pay commissions, not on Topstep X, but on most platforms. You're going to be negative before you're positive 96% of the time.
Yeah. Some of the best trades, you get the most heat, because if they can't turn it, it's going to go.
Yep. Absolutely. So that's what I see in gold. Let's go to a shorter time frame, and I want to look at that JOLTS candle because we know that that number is going to affect gold as well. We can see the news reaction here, and we can do the same thing, right? You guys, at this point, if you've been joining us, you know how I like to look at these. I'm going to frame out the high and the low of that news candle and see if there's any potential opportunities. And this gives me an area to limit risk or potentially take a trade somewhere near 50% of this candle, and risking the lows, which was about an 8-point risk on that trade. Ultimately, we didn't get a trend because we saw in the higher time frame that gold is in this balance area. But it was about a 1-to-1 trade, right? 1-to-1 risk reward. If you were risking the lows, you did get a trade back up to the highs of this candle. But when you identify that these markets are in range, you want to adjust your trade expectations for the outcomes of your trades. You want to adjust based on what the market is saying, right? If I was looking for a trend in gold to go take out all-time highs because I saw this big reaction from JOLTS, I had the wrong expectations going into today. So, trade the market that's presented to you, and there's a ton of opportunity in it. And
Great
Coach,
advice.
I'm going
Yes.
to put the moving averages up again for a second, go back to the 30-minute chart, just because this was a relevant question. Can you please elaborate on the crossing lines? The crossing
All right.
of the moving averages.
The moving averages. In this case, we have the 20 and the 50, and they're going to tangle and intertwine, or what do you call it, Coach? Braid.
Yep, they're braided.
Braided. But the longer term averages don't do that. Like, that's why I like the 200. See, if you look at this, it doesn't screw on. It trends.
Right.
And so when it's, I really don't pay attention to the shorter term braiding.
Okay.
I'm really more concerned with the VWAP or bringing it down to a shorter term to see where I can get the cheapest position. So right here, that braiding,
Ignore it
if I can't
for the
see
most
the
part.
purple, for the most part, unless VWAP goes with it,
There
then
you
it
go.
makes more. It has more power to it. But I can see that a lot better. See, now it didn't. Oh, good. See, now we can see it. That braiding where we see the yellow touches the purple but doesn't close over it. And this can be, now this time it closed over it
Yep.
and stayed there for a little bit of time. That, see, if we go farther back, it hasn't done that. So now what can we
Great point.
glean from that kind of action? The selling stop.
Yeah.
Coach,
Selling stop. No, I agree. The selling stopped in the shorter time frame. Buyers are stepping up, which is moving that average up. And the most recent, right? This is the 20 moving average, so it's looking at the last 20. In the last 20, prices is higher than it has been for the last 50. So, yeah, looks like
Yeah.
buyers are stepping up. And if we get that push, Coach, I like what you're looking at here. I've
Look
seen
at
this
that
pattern
volume.
play out so many times doing this with you over the last year that I like it. And again, no guarantees.
Yeah, I'll take. That's why with gold,
Hmm.
oh, micros.
Yeah.
Oh man, they're like little chips. You can eat. You can put 2 or 3 on and play. Without worrying about, because it's, remember, the average true range is about $35,
Hmm.
which is, it's come off a bit. That's $3,500. You If you have a $5,000 or risk, that's 10, almost 10%, 8%.
Yeah.
I mean, if you have a $50,000 combine and you have $2,000 and you're just starting out, you couldn't lose 3,500 because you're done at 2. It's
Right.
too big.
Right.
1/10. Remember, position sizing is more important
Knowing where the
than
market's going.
knowing the market. Yeah.
100. Yeah, I agree. I agree. Because you can know exactly where the market's going to go if you have 15 contracts on and you only got $3,000 worth of drawdown. The natural market fluctuations are going to stop you out before the market goes where you knew it was going to go, and then you're going to start asking yourself questions about why can't I trade? Why do I have psychological issues? And and maybe you do, and I don't want to discredit that, but maybe it's just you're trading too big. And a lot of times I think traders lean on the, you know, I need to do a breathing exercise before I trade. No, you just need to trade a size that allows you to breathe.
Wow, coach, I've never heard it put that way. Write that down. That that's
Yeah,
going to go down into the. Say that again. That's just so important.
yeah. I'm not being an ass, but you may not need a
No.
breathing exercise to improve on your trading. You may need to trade a contract size or a market that allows you the space to breathe in your account. And that might mean micros for a lot of us. You got to remember, there's a lot of opportunity to trade in these top step accounts and make a ton of money. We see traders do it all the time, but that is probably not going to be the case for most people, and that's okay, right? You can make a ton of money trading smaller size in these accounts, and I don't think there's an issue with it,
Wow.
right?
Well,
And
that's a
back to
gem.
back to Chris earlier saying you can't trade the micros. Trade some micros. The consistency, you may not make money quickly, but the consistency that you're going to see is going to improve tremendously. I can almost guarantee that. Not saying that you're going to get great results, but the consistency that you see in taking your setups and being confident in that, that's going to improve. So just try to keep that in mind. All right, crude oil.
Oh,
Crude oil. Let's take some of these
black
growing.
gold, Texas tea.
Texas tea. It closed below $70, Coach.
Wow. And I still haven't filled up.
Yeah, it closed below $70. I think that's the first
Wow.
time this year. Actually,
Is
no,
it?
that's not true. We got some closes below it. No, we didn't. No,
No
I think that's the
close.
first. I think that's the first time we closed below $70
Wow.
this year. And we were talking about
Something.
this
Oh,
yesterday. Go ahead.
yeah, go on, coach. No, go on.
We were talking about this yesterday, and that's a change, right, for the perspective of this market for the year. Now, can it just bounce tomorrow? Yes, there was some news out of OPEC. Yesterday, we reported that OPEC was poised to increase production, although we were seeing slowing in manufacturing. Today, there was a headline out that said OPEC was close to delaying that supply hike because of some of the slowdowns that we've been seeing globally. That report, and Eddie mentioned it as well, was quoted to a delegate. Didn't give a name, it just said delegate. And the way I read that was somebody was probably long at 70 and needed to get out of a position.
Took
Hey,
the words out of my mouth.
yeah, just put this out there real quick. Let me get out of this position, and then you can do whatever the hell you want. Because if we watch the market's reaction to it, it looked like a quick spike, and we got the spike above 70, and then the market said, "Wait, who said that?" and continued to sell off. So I don't
Coach
want
Paul
it.
said it.
Yeah, right. And that's just
Uh,
me being funny, making an assumption, but we can see what the market response was, right? It didn't care and continuing to sell off right now. We know that this is a very headline heavy market, so any news can change the picture. But for right now, this is under heavy sell pressure. Again, closed under $70 for the first time this year. And for the meantime, it's trending lower. Do we want to
yeah.
look at maybe some potential levels that it can trade to? I think we're going to have to go to a daily chart to do that. Looking at 67s, we got this, whatever this spike was down here. This is going back to May 2023. This candle is the low of the candle, 63.73, the high of it, 69. We'll call it 69.69. Nice. We closed right at the high of that. So maybe testing back into this and
I'll tell you what, if we get down there and gas prices are still at this level, I'm going to be very angry.
right. Yeah. What's going on? Why is it not reflected in the gas prices? And we see smart money saying maybe even 44. And who knows, right? We've seen crude lower than this before, right? We're going back to 2020 now. But on a higher time frame, if we get somewhere below these 63s or lower, then the look out below. But for right now, there's some room. Go ahead, Coach.
Yeah. Oh, we'll find out. And like we said, anything can happen. Give yourself some room to breathe. Don't worry about breathing.
Yeah.
Kind of, Coach. That was that was awesome.
I'm gonna have to put that on the t-shirt.
Yeah,
Uh,
you should.
so let's get into it. We went over the four markets. Coach, I'm going to ask you about your scouting report in a minute, but I do want to real quick put this out there. And we've mentioned it before, but we are doing a casting call for anyone that wants to be on Topstep TV. I'm going to put the link in the chat for the casting call. Fill that out. The team is going to reach out to you. You want to put some information about yourself, about your trading, make it interesting, and hopefully you will get on the show as well. And tomorrow we're also doing a casting for roasting your trades. So we are going to do a roast of trades tomorrow for Topstep's birthday. So if you want to put your trade reports up for roasting, one man Wolfpack says never going to do that. There you go. That's fine. Thank you for joining though, Wolfpack. You're a one man Wolfpack. You don't need to be on the show. Go ahead, Coach.
Jack he is quick witted and wow, he can really roast.
Yeah. I mean, he wrote for The Onion, so his jokes are always
There
going to
you
be
go.
kind of funny. Love you too, Wolfpack. But yeah, put your trades up for roasting there if you wanted to. It's all in good fun. It's never anything personal or anything like that.
Yeah.
Just for some tradertainment on Topstep TV. Also, the replay of the Linda Raschke segment from yesterday. If you have not seen it, I would suggest you watch it. I went back and watched it myself yesterday. Again, Linda Raschke was on Topstep TV yesterday during Power Hour. 40-year market maker and the author of Trading Sardines. Linda Raschke sat down with Hogue yesterday for a pretty good interview. Honestly, it was an ISO. Coach, you ever see that clip of LeBron and Kobe during the Olympics when LeBron says he was just like, Kobe Bryant does this signal and he just goes like this, and what it means is clear out for an ISO, right? For Kobe Bryant, that's what Hogue did yesterday. Linda gave the ISO signal and she ran that segment by herself, a ton of information. And Hogue was sitting there, asking great questions. But I think she could have talked for another 3 hours and gave out some really valuable information. So I would suggest anyone who hasn't seen it, go back and watch it for sure.
Yeah, great information and great experience. Linda's been around a long time and traded very successfully. And you pointed it out yesterday. Someone pointed it out on Topstep TV today.
Mm-hmm.
Nowhere did she mention the Nasdaq.
So I watched it. She did make one mention of it, and that was it. I rewatched it. She made one mention, and that was it.
Okay. One last question from Anuj. Does some does sometime extreme volume also indicate exhaustion of either the up or down move, Coach Jay?
Yes, yes, Anuj. That's a great question. When you see some of these high volume spikes, and a lot of time you'll see a reversal of the move. It's part of the reason why I really like using Delta, and we will eventually be getting Delta indicators on TopStep X. They are on the roadmap. But yeah, 100%, right? Let's look at this here. Excuse me. The way I read volume when I don't have a Delta indicator is we don't know what happened in this candle, but we know that it closed higher than it opened, so the volume candle is going to be green. What I'm looking for when I see heavy volume like this is follow through. So if there's follow through, there should be continued green candles after this with sustained volume, right? If I look at this volume candle compared to everything else around it, what is the likelihood based on the volume that we've seen? And we'll go like this. What is the likelihood that this volume is sustainable? That's the way I'm going to read it. If relative to the candles that traded around it, it's like 5 times, 10 times the size, I'm just going to think the likelihood of us sustaining that volume is pretty low. So I want to read the next candle. And already we're not sustaining it. We're not even sustaining half of it. Right? In order for this buying to continue, we need more buyers to come in, and they haven't yet. And maybe 3 minutes is not enough time to give them to take a new position. But what happens in the next 3 minutes? We see the volume waning, right? Volume waning, price waning as well. So yes, these high volume moves can mean exhaustion. I think if you're just using volume, you have to put it into context. But look at this one here, right? This was at 5:24 Central Time. Look at all the volume relative to this candle and then the price action. We have this volume at least 3 times higher than the volume candle closest to it. That's not sustainable volume for the time period based on just everything else around it. And volume wanes, dries up, and look at the price action. Even if we get price action to go higher, this volume here is not anywhere close to the buying that we saw in this candle. And I'm not surprised that, price action comes back down because those buyers cannot sustain that amount of volume.
One of my favorite trades. I call that the J trade.
Yeah.
That especially that next candle. If we break that low of the next candle or high accordingly, to me that's one of the greatest scalps. That's
Yep.
from my experience. That is pure scalp.
Yeah.
You don't have to hit a home run. You need a single, one ATR risk. One ATR is a high percentage trade, I believe, and I think that would. I don't know. I love that trade. Let's just put it that way.
Same. Yeah. And look at it,
There
right?
it is again.
Look at this high volume. Just so happens that the high volume we had in the London session, the high volume that we have when OPEC said that they were going to cut their supply, who cares what they say? The market traded to where volume traded to before and rejected off of it. I didn't even know that happened. I was just
oil minister sold into that.
Right. Yeah, somebody's selling up here for sure.
That's another time for another story. So
I love that happened because I didn't even know that's where that reaction was. But I mean, look at it.
Yeah.
Volume anomaly overnight. Price trades back to that anomaly and rejects. So I think we went over the major markets. We are about at an hour. Thank you everyone for joining. If you haven't already, go ahead and hit that like button. If you did hit it and you hit it again because I said that, make sure you hit it one more time. We need odd numbers on those likes in order to keep the numbers. But thanks everyone for joining. If you haven't subscribed already, do so as well. Let's look real quick at news for tomorrow. Coach, you got anything before we go while I pull up the news?
No, besides the regular, learn how to struggle well. I want to go back to the first question we had. Don't give up. Like coach says, trade where you have breathing room. You make much better decisions. If you're like, you have to be right, you're going to you're just relying on luck. And
Yep.
don't get that way. Develop a talent. Remember, you're in the minor leagues now. Learn to hit the curveball. And that's all I have.
There you go. So as far as news tomorrow, we'll pull up Financial Juice real quick. You see it on the left side here. We do have U.S. ADP unemployment change number at 7:15 Central Time, and then the U.S. initial jobless claims number as well. You guys know how I'm going to frame that out. Let the candle print. We don't need to trade in that candle in order to make money. We know that the ranges of it may potentially give us opportunities to take trades after that. And the employment numbers have been having a huge effect on the market recently. So just watch out for that one. And then we have a services PMI number and two services PMI numbers coming out during the session. So you'll hear Eddie mention those as well. So make sure you manage your risk. Crude inventories also. There's news all out the rest of this week. So just be aware of that if you're in a position. Again, you don't have to trade in that news volatility to make money. Let the dust settle and find your opportunities outside of that. Make sure you manage your risk. And I think that's it. Thank you,
all right,
everyone.
Great job, Coach.
Great job to you as well, Coach. Enjoy doing this with you. And I think we're going to continue getting better. And make sure you join Topstep TV tomorrow because it is Topstep's birthday. And when there's birthdays, there's celebrations. I don't have any idea what the plan is, but you tell me there's a party and I'm going to show up. So thank you, everyone, for joining. Remember, we do have Coach Ray and Coach Vince in Discord doing classes at 6 p.m. and 7 p.m. Central. And, of course, Dakota with Slow Markets at 7:30. I got to check. I think I'm on Slow Markets with Dakota. I got to text him and confirm that. So I may see you later today. But if not, trade well, have a great night, and we will talk to you all tomorrow. Bye.
Good night, everybody.